Chola Finance in Focus. Arul Selvan D, President and CFO of Cholamandalam Investment and Finance, joining us on the show. Mr. Selvan, a very good morning to you and great to speak with you. You know, we're trying to talk about what the inflection points are of the GST cuts and how they will pair out. Let's just start with your view on that. You're already seeing great commentary coming in from makers of passenger vehicles. Do you see that boost flowing in through auto financing?
Yeah, it will certainly be a good, initiative that would help spur growth of two-wheelers and passenger cars. On the CV side, the growth will be there, but it will be little bit slow because, unlike a manufacturer discount which is mostly given till the end of the quarter or end of the year, this benefit is to stay, and so people will not rush in to buy vehicles because this GST direction has happened within this quarter. I'm talking within the next 8 days. So people will take a informed call based on the economic benefit that they may see by buying a vehicle, and they will take a call on that. While the discretionary spending like cars or two-wheelers, that would be spurred by this GST cut in a little, faster way.
Mr. Selvan, the commentary that came in from Maruti, for example, was that they haven't seen such a number in a bunch of years. And hence maybe this question, but the overarching thought is that maybe Q2 might be soft for most non-banking finance companies, even consumer finance companies and even auto finance companies. But that might mark the bottom because Q3 onwards, the run rate will improve. Would you believe the same?
Yeah, that we really strongly believe because Q3 has got the good festival season also coming up. Q2, most part of the Q2 had been, as usual in any year, is filled with inauspicious period, etc., and heavy rains. So people defer purchases during this period. While the last week of this quarter has got the festivals coming in, it will have some impact, but it may not have the full impact. While Q3 and Q4 should see good, spur in demand. It's also aided by better agricultural harvest that is expected to happen this year. Both this should augur well for spurring growth on the vehicle finance side.
And you expect what, 20 to 22% AUM growth with possibly better net interest margins for the year at large, Mr. Selvan?
Yes, this is what we had given as sort of a current level of guidance. Sorry. So we expect, see, the GST impact has got also a small bit of a negative because the total value of the funding comes down to the extent of the GST part, which has come down, but that should get more than adequately compensated by the increase in the volumes that we expect to happen. So this will put together overall for the company for the year FY26. We expected 20 to 22% growth this year on the AUM side, and on the NIMs it will improve because progressively the cost of funds reduction that we are seeing both on account of repo-linked loans as well as progressively banks are slowly releasing the MCLR reductions that is out to come. With both coming into play, we will see the NIMs improving over the next 2 quarters.
To what extent, Mr. Selvan, do you see this improvement in net interest margins? Because like you said, interest rates are trending downwards and 54% of your portfolio is coming from auto loans. If cars are cheaper, perhaps the quantum of loan taken will be lesser as well?
No, see, actually the 55% of the loans which we have given are fixed rate book. So actually we stand to benefit when rates come down. While incremental volumes we may have to give at slightly lower rates considering if the market there are competition and everybody is reducing rate. But that reduction to influence the total book will take a time. This is the reverse of the situation we saw when the rates went up. In vehicle finance at that time, NIMs fell because book which was prevailing at that point in time was generated by giving yield at a lower rate, which was prevailing at the time when the cost of funds was low. Now the reverse will play true now, where we will have better cost of funds without having to pass on the benefit to vehicle finance customers, while we may have to pass on the benefit to floating rate book like LAP and HL.
Okay. Going forward, are you looking at the focus on auto loans continuing, Mr. Selvan, or is there more of a diversification that you would like to see?
We will continue. For us, vehicle finance is our staple business and we will continue to focus there. The growth in AUM will be seen visible a little larger in the mortgage businesses, which is LAP, HL, SME and SBPL. These businesses, because the mortgage business, the AUM stays on for a longer period as compared to vehicle finance. So the AUM growth will seemingly be faster or larger compared to as a percentage. So overall, in the next 3 years, the proportion of vehicle finance book will marginally drop and the mortgage book will marginally increase. This is what we see as we grow. You're seeing this already happening also in a way.
Just one question. I mean, will this, with the uptick that comes into demand, do the prospect, and you are very conservative, so I don't think delinquencies are a problem for you per se, but for the system at large, would a cycle like this ensure that delinquencies or NPAs are much lower than what normal NPAs might be, just because the potentiality of the velocity of demand is very, very high, presumably at the current point of time?
The delinquencies will progressively come down, especially in the case of vehicle finance, more so in the case of customers like SRTO, where we have most part of our customers. This is because of two factors. One, because the reduction in GST across consumption-oriented goods has dropped significantly, the consumption of these goods will increase, which will spur demand for transportation of these goods into rural and other parts of the country, which would spur growth, spur the earning potential of our customers, and thereby their credit would strengthen. The second aspect is because the price of the vehicle is coming down, and these customers are those who do not avail GST and offset GST on their billing. For them, this reduction is real, and for them, this will reduce the EMI burden to a large extent. And so their credit would strengthen much better, which would again be favorable for customers of companies like Chola.